Hello and welcome. This look into the world of commercial property VAT has been put together for you by the experts at ProTax Accountant. You know, getting this stuff wrong is genuinely one of the most expensive mistakes an investor can make. But don't you worry, we're about to walk through exactly how you can sidestep the common traps. So let's just jump right in. £100,000. Just let that sink in for a second. That is the kind of VAT bill you could be looking at for a pretty standard $500,000 commercial property purchase. It is a huge, often completely unexpected cost that catches so many business owners and investors totally off guard. So, how on earth does this happen?
Well, that's the very first question everyone asks, right? And yes, you'd be correct. But here's the crazy part. It's this exact exemption that creates the biggest financial headaches. It's a total paradox, and it's what we need to unpack.
Okay, so the default position in UK law, as it stands right now in November 2025, is that selling or leasing commercial property is exempt from VAT. So in plain English, if you're renting out an office or selling a warehouse, you just don't add VAT to the price. Sounds simple enough, doesn't it? Well, not quite.
And here it is, the exemption trap in all its glory. So on the one hand, great, you don't have to charge your tenants VAT, but here's the massive catch. You cannot get back any of the VAT you pay on your own expenses. Just think about that for a moment. The VAT on your lawyer's £5,000 bill, your architect's £10,000 fee, or that massive £50,000 refurbishment. All of that VAT becomes a dead cost, eating straight into your profits. So how do you get out of this trap? Well, this brings us to the single most important tool you have in your property VAT toolkit. It's a strategic move you can make, and it's called the option to tax. Let's see how it puts you back in the driver's seat. The option to tax is basically you making a formal decision to voluntarily charge VAT on your property deals. Now, by doing this, you're flipping the switch on your property from exempt to standard rated. And I know what you're thinking, wait, I'm just adding a cost. But what it really does is unlock your ability to reclaim all that VAT you're spending on your property costs. It's a game changer.
So, making it happen is pretty straightforward. Step 1, you make the decision. Step 2, and listen up, this is absolutely crucial, you have to tell HMRC about your decision, usually on a form called VAT 1614A, and you've only got 30 days to do it. If you miss that deadline, you could literally lose the right to get back thousands in VAT. Then, from that point on, you just charge VAT on your rent or sale price. Right, here's a pro tip. And honestly, this is the single most misunderstood part of property VAT. The option to tax is made by a person or a company. It attaches to you, the legal owner, not the actual bricks and mortar. Now stay with me because this is so important. It means if you own a property as a sole trader and then you move it into your brand new limited company, that company has to make its own completely separate option to tax. The option doesn't just travel with the property deeds. Getting this wrong is a classic and very, very expensive mistake. So beyond that standard option to tax, there are a couple of really powerful specialist strategies that can be incredibly useful in certain situations, especially if you're a property developer or a serious investor. Let's dig into those. First on the list is something called the Golden Brick Scheme. This is a brilliant little workaround, mainly for developers who are selling land to housing associations for social housing. Essentially, by selling the property just after construction has started, I mean literally after the first layer of bricks is laid above the foundation, the sale can be treated as a zero-rated supply. It's a total win-win. The developer gets to recover all their VAT on costs, and the housing association avoids a massive VAT bill. And next up, we have the transfer of a going concern, or TOGC for short. Let's say you're selling a commercial property that already has tenants paying rent. Well, you might be able to treat that sale as a TOGC. What this means is you're not just selling a building, you're selling an active, running property rental business. If you meet all the strict conditions, the sale falls completely outside the scope of VAT. No VAT is charged at all, which is huge for the buyer's cash flow. It just makes the whole deal so much smoother. But that's not all. Here's where most people go wrong. Let's bust some of the most common and costly myths that are flying around about property VAT. Believing these can land you in some serious financial hot water. Oh, we hear this one all the time from new investors. You buy a property, the seller slaps VAT on top of the price, and you just assume, great, the property itself is now opted in for VAT. That is completely 100% false. Remember that pro tip we just talked about? The option is personal.
The seller's decision to opt to tax has absolutely zero effect on your VAT position as the new owner. If you want to charge VAT on your rent and claim back that on your costs, you have to go and make your own separate option to tax and tell HMRC about it. Here's another classic trap. Picture this. A business owner, maybe a freelancer in London who owned a small office, decides to stop trading, or their income drops below the VAT threshold. So they cancel their VAT registration and just assume that all their VAT headaches have vanished into thin air. Again, completely false. You see, the option to tax is, well, it's sticky. It stays in place even if you're no longer VAT registered. That old option can just sit there dormant and then suddenly spring back to life if you have to register for VAT again years down the line. Next thing you know, you get a shock letter from HMRC demanding thousands and backdated VAT. It's a genuine nightmare scenario. There's this common belief floating around that the option to tax just has a 20-year shelf life, and then it disappears. It's a nice thought, but the reality is, as always, a bit more complicated. And you've guessed it, it's false. Now, while you can apply to revoke an option after 20 years have passed, it is not automatic at all. You have to formally write to HMRC and ask them, and you have to meet a whole bunch of strict conditions. Permission is not guaranteed, so you can't just sit back and assume it will expire on its own. Whew. Okay, so we've looked at the default position, the main tool you have to manage it, some pretty clever specialist strategies, and the myths that can really trip you up. Now let's pull all of that together and figure out your next steps to move forward safely. So here are the key takeaways. Number 1, remember that the default VAT exemption is usually a trap that stops you from getting your costs back. 2, opting to tax is your key to taking back control. 3, never, ever forget that the option is personal. It's tied to you or your business, not the building. 4, know that powerful strategies like TOGC and Golden Brick exist for big savings. And finally, number 5, this stuff is complex and the mistakes are expensive. Getting professional advice isn't just a nice idea, it's absolutely essential. Now, just a very important note. The information we've discussed here is for general guidance only. You really shouldn't rely on it by itself to make financial decisions. The rules are complicated, and the right answer for you depends entirely on your specific situation. So before you make any big decisions, you absolutely must speak with a qualified expert. To help you navigate these tricky rules for your specific property venture, you can get in touch with the specialist at Pro Tax Accountant. Their details are right there on the screen for you now. And if you want to dig even deeper into all of this, you can find a really comprehensive guide that covers all these points and a whole lot more in the full article on the Pro Tax Accountant website. And finally, if you found this breakdown useful and you want more clear, actionable tax guidance that could genuinely save you thousands, make sure you hit subscribe on the Pro Tax Accountant YouTube channel. Thanks so much for joining us.